more belt-cutting measures from another bank.
Exactly, Sherry. I mean, the stock is down 29% this year. Compare that to the KBW Bank Index, which is down 20%. It's down more than that, and we'll get to some reasons why, but it's definitely another effort to appease investors. It's been on a sort of a belt-tightening initiative. The statement from the spokesperson at Schwab basically saying that Schwab is taking a series of actions this year and into next year aimed at removing costs and complexity from the firm, and that action would result in some eliminations, mostly in non-client facing areas. We're talking about a brokerage/regional bank that has 36,500 people employed, but is also integrating TD Ameritrade, right? That was the deal that was announced back in 2019. It's really only taking effect now. So ostensibly, according to the regulatory filing at least, this is in order to prepare for the synergies of that deal and, you know, the post-TD Ameritrade integration.
And Vonnie, to what degree are these aftershocks from the banking turmoil that we saw last spring?
Yeah, I mean, for sure, this has something to do with it as well, right, Paul? We saw that Schwab was very badly hit during the turmoil in the spring, and it was one of those regional banks, brokerages that lost deposits, 7% at one point. In the last quarter, we saw management come out and say, look, the worst is over. We are actually going to see accretion again, and by the end of the year, we'll be seeing growth once more, and our net interest margins are also going to be improving by the end of the year. So it got over the hump, but it definitely went to market. It issued bonds, about $2.5 billion worth of bonds. It also took advantage of some programs, which it's now paying back. It's paying back some of the monies that it got in order to get itself over that hump. But surely this has to be another reason, another way of appeasing investors. And just to give you some of the details, it says it's planning annual savings of about $500 million, and that it'll be a one-time charge of between $400 and $500 million. We don't yet know the extent of these job cuts. The filing didn't say. It left it very open, but it's also reducing its corporate headquarters footprint, its real estate footprint, if you like, and that you have to just say is makes sense, right? Taking advantage of the environment that we're in order to save some money on real estate costs.